Alright folks, I'm going to buy the old Fair Value Gap. Stop loss below the low of that wick. And then we'll be looking for 21,388.5. As I indicated earlier on my YouTube channel. So initially, I want to see it trade back to first percent of Fair Value Gap, which is right there. I guess I should just draw it in, shouldn't I? Doing this on the phone. It's a little annoying sometimes. So we're going to draw back up into that initially. And then we'll see what we get in regards to subsequent price delivery. So obviously we have the morning profits, just under 6,000, less commission. So this is not even half of what was already capitalized on pre-session before 9:30 opening. So even if I'm wrong here, it gets stopped out, it would still allow me to go home with more than 36, 35 something. Alright, I like what we're doing here. So I'm going to add 4 more. I want to see expansion up into that city at 9:46 a.m. That's this one. And again, this is that daily Fair Value Gap. I told you we want to see it trade up above and back down in to send us higher. So we're seeing that here, and I'm going to pair some of this risk a little bit. There we go. All right. So back in the first percent of Fair Value Gap, as indicated when we get into this blue shaded area here. Right here. That's the first percent of Fair Value Gap. You want to see it trade above it, come back down in, spring up into that. Watch the high of that Fair Value Gap that's shaded in orange. That's the daily Fair Value Gap, remember. Once we take out this high, right there, then I'll roll the stop to cover costs. Right now I have to incur the risk. Just the volatility alone might take me out prematurely if I'm too aggressive about bringing the stop up. I will raise it just a little bit. There you go. It's certainly something better than there we go. It's almost like I know what I'm talking about. Alright, just a little bit more. Take out this. Take out this high here. Once it trades above it, it doesn't have to close above it. Just trading above it will give me the green light to roll the stop to cover costs. The reason why I'm not wanting to do it right now is because that down close candle right here. Let me get the little highlight thing. black candle there, that could be used as an order block. Okay, so I'm mindful of that, and I'm already in a position where it could still come down. You drop into that, and you get really animated. And stop that trade out. Given the morning volatility and the news calendar that we've been dealing with, I'm going to just cover it. Anyway, if it stops me out, I'm good. Reputation maintained. So we have that little volume imbalance we just dipped into. Right there. Institutional order flow entry drill would be right there. And that's about as far as I would like to see it trade to. Now, it should rally higher. I'd like to see that fair value gap it's inside of right now stay open to some degree. This would be a Venom-esque type structure here. Especially if we start going higher here and this candle turns bullish and starts ripping above that high, and that high. Real aggressive. That fair value gap right there is what I was talking about. See that left portion of open? That's what I'm talking about. That's the money. That's the money, baby. All right, now start building long green candles higher. That's what I'm anticipating that. I'm welcoming that. Summoning that and invoking it. Back down into that wick. Discount wick here. Right there. It just feels like they're trying to sell the idea it wants to drop, and I'm not subscribing to that at all. If we can manage to get above this high, I'll roll the stop just below that. Alright, so we're going to have to apply a time stop now. So it's got 2 minutes to get above that short-term high right here. So this candle and or the next has to be above it, or I'm going to take some of the trade off or close it all together. There we are. I'm going to roll that stop up just below here. I may still get stopped out. I don't care. Come on, Trading View. There we go. So back to first potential fair value gap 2 times. Now we want to see it go above it, come back down in, and then take out that high and march towards this buy side liquidity, as I mentioned in the YouTube video this morning. Very nice, very, very nice. Now I'm just making sure that I go home handsome today. Seeing sunshine, love all rainbows. We have a new member in our community. We're honored to have Marcy, who is the president as of May 15, 2025, the #1 seat holder on the Robbins Futures Division. Right on that, okay. All right, so I'm just going to take 6 of them off here, just because, I want to make sure, because today's got a wonky calendar. It's 10 o'clock news. So that way I've already paid the trader. I've already booked a profit. I've already seen 60% of my analysis come to fruition. So now I don't care if I get stopped out. I'm still going to go home with more, or at least I get a free look to see if I can get up there and get that buy side I mentioned this morning. I'm trusting the first potential fair value gap to keep price above the consequent encroachment. That's essentially what I'm doing here. So my stop is affording a little bit of slippage, the effects of a spread inside that first potential fair value gap, which is that area right there. And I'd like to see it not even come back to it. That would really indicate that it's likely to go to my 391.25 limit order on the 4 remaining contracts. See that small little gap right in here, right there. I'd like to see it use that, but keep it open. Don't completely close it in, and then go higher. Don't even come back to the first potential fair value gap. It's ideal for me because of how I've managed the trade here and what has already taken place. We had higher high book, and we're chasing back in. So you see a continuance of high prices. Admittedly, this is an uncomfortable place to be if I would not have taken partials. So if I hadn't already taken a partial, I would be a little uncomfortable here. Not to the point of freaking out or panic or anything like that, but just on the basis of the trade not finding its momentum higher. All right, so we came down and closed in that gap, it looks like. Right there. Not technically. I mean, we still had the volume of ounce. Yeah. It would look like this. And still ain't right. Yeah, that's it right there. So that's good. It didn't even come down to consequent encroachment with that wick right there. You see that? So that's a positive. Walking on sunshine. It's in my head now. An earwig. It's a song that gets in your head and you constantly keep thinking of it. You blame me for it all day now. Hi, I'll bring the stop up. Just first present the Fairvega. Want to see that old Fairvega we're inside of right now, support price. We don't want to see it come any lower. We'll close below it. We want to see it find some strength to get back up, make a higher high, trade into that 350 level. Okay. Completely comfortable getting stopped out still. It's a book profit, and 60% of the trade's already been booked at near the high. So nobody's complaining here. So it came down completely, booked a return into consequent encroachment of that gap I just showed you here. Right there. So this is one of those instances where I want to see a retail bull flag pan out. Not that I trade bull flags, but that gap there now came down into consequent encroachment. Let's discount it. I'd like to see it obviously higher now. Okay, so now I'm going to give a 3-minute time stop, meaning it's got 3 candles starting now. So it's got 3 candles to take out the high at 10:01. Or you can have my stop. So that's how it's going to work here. Back down into discount range, or PD array rather. Tapping into probably the first defensive array gap once more. And my trade relies on the consequent encroachment of that level supporting price and not letting it go any lower. Okay, we tap the first defensive array gap once more. That's that lower blue rectangle. And we're starting candle number 2 of 3 that I'm using as a time stop. Now here's where the rubber meets the road. Stop, out. What am I going to do now? I probably shouldn't show this one online.